Hey everybody, welcome back to the channel. Today I want to do the DR IDR using ICT concepts, the weekly review on the 5-minute chart from July 24th to July 28th. Okay, I know if you're thinking, hey, I just want to watch the silver bullet setups and those videos, don't worry, I make all of them all the time, still making them. But this is something you may want to consider trading between 11 and 1:30 p.m. Okay, so this is something I do after the silver bullet hour is over in the AM session and before the PM session starts. And if you're just not willing to watch the video and see that it could work out really well for you, then I think you're really missing the boat here, because ICT has even said that if you apply his concepts to other trading methodologies, it improves their profitability quite a bit. So DR-IDR has been around for a while, but applying ICT concepts just makes it that much more profitable. Okay, so I'm going to show you how each day we had a setup. Okay, and this is just the last week. So what happens here, if you're not familiar with DR and IDR, okay, so this is the IDR line right here, interior line here, and there's the X here, that's DR line. Okay, it's the dealing range, it's all it stands for, and it's from 9:30 to 10:30, okay, a.m. So what this tells us is once that hour is done, that makes your ranges. When a candle closes above or below the DR line, which is the outer line, that confirms that of the direction. Okay, what that tells us was that within 70% accuracy, that this low of here will not be violated the rest of the day. Okay? So the closing session, this line won't be violated. So knowing that 70% chance or more that this line is not going to be violated, that gives us quite a bit of accuracy as far as what we're aiming for, right? Like if we take a trade and I put a stop here, 7 out of 10 times our stop's never going to be hit. Now, do you want to trade that way? No. But knowing that, hey, we're looking for higher prices, a lot of times directional bias is the thing that people struggle with. This gives you directional bias. Now, I only trade this during the 11 and 1:30 time frame, okay? If I'm not in a trade by usually around 1, I'm done. I'm just waiting, and I'll take a break, and I'll come back for the PM silver bullet session on the 1-minute chart. This is a 5-minute chart, okay? Let me throw up my rules here so you can see them. Let's move this out of the way here. Okay, so here's my rules. Only take a trades between 11:30 and 1:30 p.m. So that's this white area right here. Okay. DR direction confirmed. That's where this candle closes above this DR line. You'll see the green arrow right there. It's really small. You'll see a red arrow down here. That is confirmation. All right. Then I'm looking for an ICT PD array, a fair value gap, an order block, a breaker block, mitigation block, rejection block, all the PD arrays, okay? So on this one, let's just mark them out. Let's mark them all the way to the 1:30. Oops. 5-minute fair value gap right there. And now let's mark this one out. All the way to 1:30. Okay. All I care about is this white area right in here. I don't care what happens from the gray area. If it reverses all the way, I don't care. I'm only taking trades in this area right here. Okay? So it doesn't matter. From this part on, I don't care about. All I care about is right here. What's price doing right in this area? Okay? You know from my other videos that if price comes in here, I'm at least taking it halfway. But if there's a second one, I'll take it on the bottom of this one, preferably down to the second one. Okay, price never makes it to the second one, so I would have put my entry would have been at the bottom of this fair value gap. I would have let it come through it and hopefully get the top of this one. I would have taken a trade, but it rejected here and never hit it. So it stopped there, started, came back up and stopped. I'm probably doing a manual order on this one and taking a trade at the bottom of this fair value gap. No, that's not cherry picked. That's my rules. That's how I trade in my trading plan. If there's 2 fair value gaps, I'm bypassing the first one, waiting for the second one. If it doesn't hit it, then I'll get in on the second one based on structure. We have failed swings here. Price is obviously going higher. We want to see higher prices because DR is confirmed to the high side. So if I took my trade, I would have taken my trade right at the bottom there. Still would have gone below the fair value gap right here, which would have been 3.5 handles. 2 to 1 risk to reward ratio right there. Partials at 60%. Would have gotten my right here, would have taken partials at 60%, so I would have taken a partials there, move a stop to break even, so it would have been a break even trade right in here, so it would have been stopped out in profit and taking a partial on this one. Okay, just being based on my rules, 60%, I move stop to break even, move stop loss to break even at plus 2 ticks. I always do 2 ticks because I don't want to be at 0. I just want to have a little bit of money profit in there, make sure I cover any spreads or anything, so commission fees or anything like that. So I always move it just a little bit above break even. But I took a partial here, so I'm fine. Got paid. I'm cool. It's great. If you didn't move your stop, you would have hit full TP, and there you go. Okay. Let's go to the next day here. That was Monday. So Monday was the winner. Based on our rules, we did break even. So now let's go to the next one. Here's, again, my rules are still here on the side. I'm leaving them up there so you can see how that we're playing by the rules. Again, price only trades between this white area here. So this is the only thing I care about. DR direction confirmed. Yep, got another green arrow. Candle closed above. Now, why is this one not confirmed? Well, it didn't close above the line. It wicked through it, sure, but it's got to close above it. And this one actually closed above it. Look for the PD arrays. Okay, well, we've got one here. Okay. We have another one right here. I'm marking them out even though we know that they're not here. There's our PD arrays. We have one down here as well. I'm not going to mark it out. Nothing's down there. But that's where you're looking at immediately as price comes up here. So I get my notification on my phone or online as I'm watching the price. I see that it closed. From this candle on, I'm looking at this candle starts. I'm like, okay, now there's a fair value gap here. There's another one here. What's going on? All right. So when price comes back in, it stops here. Obviously, we're going to take a trade. We're not going to leave it. Has to be 1 tick below the low. So that's 3 1/4. Aim for your target of 2. And done. Another 7. Now, do we have to do this? No. Do you have to take partials? No. I leave a runner on for full tight TP, right? So when it came up here, I would have taken a partial here, move my stop to break even, and then hit TP. But if it's over here, like sometimes, and I know that we're really in a bearish or a bullish trend like this, I'll leave a runner going and just kind of see how high it goes, because you can see that if you left a runner going and just kind of trailed your stop, there's another 14 total points. You're leaving on the table just by doing 2 to 1. Okay, so you can do more than that, is what I'm saying. There's a lot of room for expansion here. This is just the initial rules that I trade by. I can always leave a runner and trade it how I want to do it, if I'm managing the trade or not. Okay, so another winner on Tuesday. Let's go to Wednesday here. Throw the rules up here. Okay. Again, only taking trades between 11 and 130. White area. Don't care about this. This obviously broke this. We're looking for shorts. 70% chance this line's not going to get broke. It obviously does get broke up here. So this is one of those 30% days that it failed, right? But during the white area is all I care about. So it didn't fail at this white area, right? Now you probably took a loss in here, but then you took a winner. So let me show you. ICT PD arrays, as we've had a close. What am I looking for? Well, there's a one right here. Because when it's closed, that's when I'm looking for PD arrays. And I'm looking at this right here. Move it all the way here to the fair value gap right there. Okay? So now, and then I'm also looking up here. This right here is a rejection block. I wouldn't have marked that out until after I lost the first one. Just being honest. Okay, so what would have happened? We would have taken a trade. You would have got in here. Okay, right here. Your stop would have been a tick below. I need to put this on here and see where it's at. Oh, one above, one more. Oh, right there. Oh, come on. Right there. All right. So you'd gone for 2 to 1, but you would have got stopped out, right? So you got stopped out there. You took a loss. So you reevaluate. Okay, what's going on here? Where are we going? We stop it. Let's look for more PD arrays in this area. There is a PD array here, a rejection block. Let's see how it respects it. It respects consequent encroachment. Still consequent encroachment. Let's see how if that's really consequent encroachment or not. Should be really close. We need to put this on here. There's consequent encroachment, that red line. So it is respecting the consequent encroachment of the rejection block. So when this candle opened here and stopped, that's when I'd be taking my trade. And I'm only going one tick. I gotta turn this off. One tick above the line here. I'm going right there. Now, me, on my rules, granted it's not on here, this is what a lot of people would use, okay? They'd limit their risk. Me, I always have at least a 2 handle stop. I'll risk the $100. Give it a little bit more room to close because it can wick through, and if it closes above this, right? That's when it invalidates the short on this day, okay? So I would have got in here, I would have risked $100. Okay, cool. So I already took a loss. Now I'm risking another one for a retirement setup type trade. Okay, so now I'm aiming for 2 to 1, which I wouldn't do right now. If I'm in the range, I'm minimum aiming for the bottom here. Okay, so that's a 3 risk reward ratio right there. And so this one I would probably have trailed it to see as far as I could have gotten and tried to pick up my 2 to 1 plus my risk here that I just lost, to be perfectly honest. But we'll go with 3, just to the bottom, and that's fine. So we took a loss, we took a win, right? So we're in profit on this day. Could have been in profit much more, but we stopped at 3 for sake of discussion here. And there you go. So we've got 6 minus 2.75, so we're 3.25 point or handles in profit for the day. Okay, so that's Wednesday. Again, don't care what happens at the gray area. This invalidated it. Don't care because I'm not looking at any of this. I trade all this in microstructure on the 1 minute, so I don't even care about what's going on over here. Okay, so let's go to Thursday. Okay, let's throw our rules up on there. Okay, where did we do? Only trade between 11 and 1:30. Again, this is the white area. Are you starting to see how this could be profitable for you and how you could actually use this to get directional bias during the lunch hour session or from 11 to 1:30? I hope you are, because this is it's been really fun to watch and just kind of trade, and kind of takes the thought process out of it. They're just set rules. Just put it in and go. So direction confirmed, DR direction confirmed. Yes, red arrow. It's closed below the DR line. Perfect. Now we're going shorts. Look for structure. We have a small one right here. Small fair value gap right there. Okay. We have a bigger one here. I need to turn this back on. Have one right here. Now for me, I love coming into the mid-range because I just love the bigger pullback. And if you take a fib as well from like the high to a low, high to low, you're usually kind of close to optimal trade entry, usually. So if you have that also helping to confirm, That's a good setup. So multiple reasons that I take this one over hitting into this one. Okay, first of all, my rules are if there's a first one, I want to see if it can hit the second one first. And his price closed above it. I'm waiting to see closed above it. Yeah, I'm definitely waiting to see if it's going to hit the second one. It's in the middle range. It's also an optimal trade entry. You would have taken this trade right here, at this one right here. Right, the stop there. Your stop would have been, let's see, above that candle right there. So it would have been, well, 6.5 handles. I don't trade anything over 5, so mine would have been the max right there. And you would have gone for at least 2 to 1, which would have been right here. Okay? But here's the deal. I have learned over the time of backtesting this, forward testing this, trading this live, that I tend to use 2 contracts like I always do. I always take my partial and I move my stop up to break even. Okay? But then I move my target way far down down on the range. Okay? And the reason I do that is because days like this. This day right here, I got out somewhere in here. I think I got 3 to 1, so I think I was down here. It was after that candle, so it was definitely this candle that got me out on my funded challenge. This is the one. But had I just left a runner on and just trailed my stop, and then took it to the new week opening gap, which is right here. Okay, that's 59.75. Let's just do one more, so it's 60 even. Let's try and get 60 even. 60 even. That's 60 handles. Okay? 60 times $50 per handle on ES. That's 3,000. On Apex, that passed my funded challenge right there. Just that trade. Just that one trade passed the funded challenge right there. So you see how a runner would be great in to follow market structure. Are the bearish order blocks being respected? Yes. Yes. Yes for now. And then it stops you out. So following structure, you can actually trail your stop along the way here and make more and capitalize more on these gains. This would have taken you past your funded challenge. Okay, so let's go to Friday. Is it always winning days? No, it's not always winning days. Only take trades 11 to 130. That's this white area. Directional confirmed. Yep. DR confirmed right there. The green arrow. It's confirmed. Candle close. Look for PD arrays. What do we got? We got one right there. We got one right here. That's really all I would have marked right there for now until it comes back in. I'd keep looking for something different. There's a rejection block here, potential rejection block, there's an order block, you know, but I'd mark these out for right now. Price came back and tapped the line here. Again, if there's 2, I'm looking for the bottom one. So you're taking what trade here at this top of this one right here. You're going here. Again, my stop is only 5. I don't go anything more than 5. And 2 to 1. I gotta lower this down. 2 to 1. I'm shooting for that. Do I get it? Do you see it? No, I don't. Do I get 60%? No, yeah, I don't think you do actually. Let's see. Let's put the fib on. Let's see if we get 50% here. Yeah, we're right at 50%. So this one would have been a loss right here. I would have lost on this day. If you took a trade in the middle and shortened your thing, like come down to the middle and lowered your risk to, you know, it still would have been 5 because you still would have been 1 tick. Either way, this one was a loss. You got a loss on this one. If you didn't move your stop up here or take a break even earlier than 60%, you took a loss. So, you know, some people, they like to trail their stop and move it up. As soon as it comes 50%, they're moving it up and reducing the risk. I agree with that. As soon as this volume imbalance closed bearishly, and then you got another started with a bearish volume imbalance, I probably would have moved my stop up. But on this day, I wasn't trading on Friday. I had other things to do, and so this one probably would have taken a loss. Okay, so if you set it and forget it, this one was a loss. Out of 5 days, he had 1 loss, 1 break even. Let's go back through. There's the one monster of a day, 1 loss on Friday, 1 loss and 1 winner, so you came out ahead on that day. Another full TP target hit on that day. And on this one, you would have had a 60% break even and 60% in break even. So there you go. That was your weekly review for July 24th through the 28th.